Hello everyone, welcome to the market opening bell on Wednesday, April 8th, your 10-minute guide to the stock market. The 5-day long holiday for Easter and Qingming Festival has ended. First, let's review the Hong Kong stock market performance on the last trading day before the holiday, which was last Thursday. The Hang Seng Index opened lower by 39 points on Thursday in the afternoon. The decline widened to 392 points, hitting a low of 24,901 points. The losses narrowed in the late trading, and the index closed down 177 points or 0.7% at 25,116 points. The Hang Seng China Enterprises Index fell 47 points or 0.6% to close at 8,456 points. The Hang Seng Tech Index dropped 77 points or 1.6% to close at 4,679 points. Total market turnover for the day was 243.6 billion Hong Kong dollars. Southbound funds recorded a net inflow of 19.828 billion Hong Kong dollars into Hong Kong stocks. Among them, net buying included Tracker Fund, $8.546 billion, Hang Seng China Enterprises Index ETF, $2.594 billion, Xiaomi, $1.115 billion, Tencent, $667 million, Geely Automobile, $427 million. Net selling included CNOOC, $734 million, Alibaba, $248 million, Yangtze Optical Fiber and Cable, $240 million. According to statistics, Southbound funds have net sold Alibaba for 6 consecutive days, totaling $3.709 billion. Net sold CNOOC for 5 consecutive days, totaling $5.04 billion. Net bought Tencent for 6 consecutive days, totaling $3.321 billion, and net bought Xiaomi for 3 consecutive days, totaling $2.037 billion. In summary, the 3 major indexes showed divergent performance last week. The Hang Seng Index rose 164 points or 0.7% for the week. The H-share Index rose slightly by 3 points or 0.04%. The Hang Seng Tech Index fell 98 points or 2.1% for the week, underperforming the broader market. Southbound funds recorded a net inflow of approximately 5.37 billion Hong Kong dollars last week. It's worth noting that there was a record high inflow of $29.7 billion on Monday, the 4th highest in history, but it turned into a large net outflow on Tuesday, indicating that mainland investors remain relatively cautious. This week, the Hong Kong stock market has only 3 trading days. Technically, the Hang Seng Index has regained the 25,000 point level. If it can hold steady above this level and reclaim the 250-day moving average at 25,141 points, it may challenge the 20-day moving average again at 25,362 points. Last week, the Shanghai and Shenzhen markets were affected by global geopolitical tensions and pre-holiday sentiment, showing an overall volatile downward trend. The Shanghai Composite Index closed at 3,880 points last Friday, down 0.8% for the week. The Shenzhen Component Index closed at 13,352 points, down nearly 3%. The Chinex Index closed at 3,149 points, down 4.4% for the week. Trading volume on Friday shrank to less than 1.7 trillion yuan, reflecting a strong wait-and-see atmosphere before the holiday. After the holiday, the Shanghai and Shenzhen markets resumed trading on Tuesday with relatively stable performance. The Shanghai Composite closed at 3,890 points, up 10 points or 0.3%. The Shenzhen Component closed at 13,400 points, up 47 points or 0.4%. The Chinex Index closed at 3,160 points, up 11 points or 0.4%. The renminbi central parity rate on Tuesday was 6.8854 per US dollar, up 75 pips from last Friday's rate, hitting a near 3-year high. On the news front, Geely Automobile Management reiterated its 2026 overseas sales target of 640,000 vehicles, of which approximately 300,000 will be fuel-powered cars. The company has already delivered 180,000 vehicles in the first quarter, making good progress. Management stated that overseas capacity expansion will prioritize the use of existing factories to avoid large-scale new investments. They also set the target to reduce the average cost per vehicle by approximately 7,000 to 8,000 yuan to offset rising chip and raw material prices. The company maintained strong pricing discipline in the first quarter, resulting in a significant increase in profit per vehicle. Profit per vehicle in overseas markets may reach 13,000 to 15,000 yuan, roughly 3 times that of the domestic market. Guangzhou Automobile Group sold 176,855 vehicles in March, up 1.7% year-on-year. New energy vehicle sales reached 57,577 units, up 72.6% year-on-year. The latest automobile consumption index released by the China Automobile Dealers Association shows that the March index stood at 74, a slight improvement from the previous months. It is expected that the automobile market will continue to warm up in April, with sales slightly higher than in March. U.S. stocks were closed on Friday last week for the Easter holiday. Summarizing the 4 trading days of the week, the 3 major indexes all recorded weekly gains of over 3%, ending a 5-week losing streak. This week, U.S. stocks rose on Monday, while on Tuesday the 3 major indexes showed mixed performance. The market is awaiting the U.S. set deadline for Iran to reopen Persian Gulf shipping routes, with Iranian infrastructure potentially facing attacks. However, Pakistan, acting as an intermediary, has requested that the U.S. delay any escalation of military action against Iran by 2 weeks. The Dow Jones Industrial Average fell 85 points or 0.2%, closing at 46,584 points. The S&P 500 index rose slightly by 5 points or 0.1%, closing at 6,616 points. The Nasdaq Composite Index gained 21 points or 0.1%, closing at 22,017 points. The Fair Gauge VIX Index rose 1.6 points or 6.7% to 25.8. The Nasdaq China Golden Dragon Index, which reflects the performance of Chinese concept stocks, fell 63 points or 0.9% from Monday, closing at 6,673 points. Apple reportedly encountered engineering difficulties with its first batch of foldable iPhones, which may delay shipments. The stock price once fell by about 5%, but later clarified that it would still launch as scheduled in September. The decline narrowed and the stock closed down 2% for the day. Tesla also fell nearly 2%. Alphabet rose about 2%. Broadcom benefited from expanded artificial intelligence cooperation agreements with Google and Anthropic, with its share price rising 6%, making it the best performing stock in the Nasdaq 100. According to reports, SpaceX, which is about to list on the U.S. stock market, held a meeting with its banker team on Monday evening to provide detailed information on its IPO plans. The company plans to allocate a significant portion of shares to retail investors. Reports indicate that SpaceX will hold an event in June after the IPO roadshow begins, with 1,500 retail investors expected to attend. It's understood that retail investors from the United Kingdom, the EU, Australia, Canada, Japan, and South Korea will also have the opportunity to participate in this offering, in addition to those from the United States. On the economic data front, the U.S. March non-farm payrolls released last Friday increased by 178,000, higher than the previous value of a decline of 133,000 and also above the forecast of 60,000. The unemployment rate fell back to 4.3%. Earlier, the so-called small non-farm ADP employment report for March showed an increase of 62,000 jobs, beating expectations of 40,000, while February's figure was revised upward from 63,000 to 66,000. However, the ISM data released on Monday showed that the non-manufacturing index fell from 56.1 in February to 54, below the market expectation of 54.9, though it remained above the 50 expansion threshold, indicating that the services sector continued to expand but at a slower pace. Notably, business cost pressures rose significantly. The prices paid index jumped sharply to 70.7, hitting a new high since October 2022. The single month increase of 7.7 points was one of the largest in nearly 14 years, reflecting how the Middle East conflict has driven up oil prices, causing rapid increases in energy and raw material costs. Pakistan has requested that U.S. President Trump postponed the deadline for Tehran to reopen the Strait of Hormuz. As a result, oil prices weakened their upward momentum on Tuesday, erasing earlier gains and closing almost unchanged. Brent crude June futures settled at $109.6 per barrel. NYMEX May crude oil futures settled at $113 per barrel. OPEC Plus agreed to increase crude oil production by 206,000 barrels per day next month. However, analysts noted that the production increase is largely symbolic, as the increment is modest and major member countries affected by the Middle East conflict are already unable to ramp up output. Additionally, officials from several Gulf countries stated that even if the war ends and the Strait of Hormuz reopens, it would take several months to restore normal operations and reach production targets. Our stock pick today is CARsgen Therapeutics, stock code 2171. CARsgen Therapeutics is a biopharmaceutical company focused on developing innovative CAR T-cell therapies to address unmet clinical needs, including hematological malignancies, solid tumors, and autoimmune diseases. The group has established end-to-end capabilities in CAR T-cell research and development, spanning from target discovery, preclinical studies, clinical product development, to commercial scale production. Through independent development of new technologies in the product pipeline with global rights, the company aims to overcome the challenges of existing CAR T-cell therapies, such as improving safety, enhancing efficacy against solid tumors, and reducing treatment costs. The group has independently established GMP-compliant manufacturing capabilities to support vertically integrated CAR-T production, covering plasmid, lentiviral sector, and CAR-T cell product manufacturing. Vertical integration helps improve efficiency, strengthen quality control, enhance product consistency, and accelerate patient turnaround time. Integrated production will also significantly reduce costs, improve profit margins, and enable more favorable commercialization. The group has also developed a robust process development platform for allogeneic CAR-T products, supporting IND applications and upcoming clinical production. With its GMP-compliant commercial production facility in Jinshan, Shanghai, the design capacity can support autologous CAR-T cell therapy for up to 2,000 patients per year. The group can independently produce lentiviral factors and CAR-T cells to support clinical trials and commercialization of CAR-T products in China. Large-scale production of lentiviral factors can substantially lower the production costs of CAR-T therapies. For the year ended December 31st, 2025, the group's revenue was 125 million yuan, primarily from CARsgen. CARsgen is a fully human B-cell maturation antigen. Autologous CAR-T cell product has been approved by China's National Medical Products Administration for the treatment of adult patients with relapsed or refractory multiple myeloma who have progressed after at least 3 prior lines of therapy. The group has entered into a commercialization cooperation agreement with the wholly owned subsidiary of Huadong Medicine Hangzhou, for the commercialization of CARsgen in mainland China. According to the agreement terms, CARsgen Therapeutics is entitled to receive up to a maximum of 1.025 billion yuan in registration and sales milestone payments. In terms of commercialization execution, Huadong Medicine has established an independent, professional, and comprehensive commercialization team to fully promote CARsgen and has leveraged China's multi-tiered insurance system to improve patient accessibility. In 2025, CARsgen was certified and filed in medical institutions covering more than 20 provinces and municipalities across China, and the group received a total of 218 valid orders from Huadong Medicine. With ongoing marketing activities and expanding insurance coverage, sales revenue from CARsgen is expected to accelerate further. The group recorded a net loss of 103 million yuan for the 2025 financial year, a significant reduction compared to the net loss of 798 million yuan in 2024. The adjusted net loss was 78 million yuan, also substantially lower than the adjusted loss of 789 million yuan in 2024. Looking ahead, the group will continue to focus on the commercialization of CARsgen and Shureiji Aolunsai injection and plans to develop these two products in earlier line therapies. At the same time, it will continue to develop new technologies and advance its R&D pipeline of other products in clinical and preclinical stages. Recommendation: buy at $18, target price $20.50, stop loss at $17. I do not hold the above stock.